So CD&R, we had picked up last week, had been in talks to buy Sealed Air, and the biggest packaging deal in a long time. And today we see it get to the finish line on this merger Monday. And what's interesting here is that while the enterprise value is over $10 billion, which is pretty big, the share price is sort of below where it's trading on the margin. So not a huge premium here. In fact, no premium. It's sort of a take under. And if you see where shares are trading, investors aren't super thrilled, but it is, still a good sign for this to get to the finish line. We are seeing a lot of take privates in this M&A boom. Private equity is putting their dry powder to work. This is the latest example.
Was this an obvious candidate for takeout?
It's funny that you asked, because packaging has been sort of a predictable area of revenue, and we were sort of expecting at a time of economic uncertainty that we would see more packaging deals. But if you look at the data, packaging deals have been down compared to last year, where other sectors, even in industrials, had been busy. So it was a little surprising to see a big deal in this space, but there could be more because it's sort of a predictable area to invest in.
Having been adjacent to the private equity world most of my career, I think I learned a few things, which is it's easy to raise money. It's easy to put money to work. It's really hard to monetize those investments. Where are we in that monetization? Because it's been kind of a fallow market for the last 4, 5, 6 years.
So I'm surprised you said it's easy to raise money, because I've seen my colleagues who focus on private equity have been writing about some issues in the fundraising market, that it's not as easy as it used to be. But definitely there's fewer and fewer publicly traded companies for you guys to report on, because there's just so many of these take privates. Mm-hmm. And the IPO market, which is one way that these PE firm sponsors could get some monetization, that's been shut the past few years. I know things are coming back a little bit, but these sponsors love to trade assets to each other. And there were some other private equity deals today. Bain bought a golf company from Clear Lake for $1 billion or so. So we do see the steady drumbeat of private equities firms just trading assets to each other, and then the occasional big take private like this morning.
So you mentioned that it's a little harder to fundraise now than it was a few years ago. Presumably that's because of where interest rates are. If interest rates do decline in 2026, what does that mean for fundraising efforts by PE?
So I would say that it's going to be easier for firms to borrow for leverage buyouts. So we could see more deal making, and that could lead to monetization, which could then lead to saying to investors, hey, we have these great returns from these sales. Maybe now's the time to raise money. I do think that there's also so many newer private equity firms emerging, and then with private credit, there's just a lot of things competing for investors' attention. But yeah, this is one for CD&R, probably their largest deal in a while. But there's probably more take privates in the market for some of their competitors.
MA go on this deal. You see where the advisors are, who's getting paid, which one of my buddies are getting paid.
So it's funny, I don't have enough time to mention how many banks are on the financing. So everyone is on the financing. And it's funny, we reported late last night that this deal was going to happen, and we were trying to get the share price, and we were kind of kicking ourselves because we didn't get that in time. When everyone clearly was a poorly kept secret. A lot of people knew. They were, mum's the word on the price.